I think now as we wind down this year, the focus is shifting to the third quarter earnings, that is the October to December earnings. I think there is absolutely no doubt about it. December, by the way, has been the pinch month, I mean the pain point as far as most sectors and industries are concerned. The only question is, will growth be down 20-30%? Will it be down 40-50%? Will it be down 5%? We don't know that. So even as markets have corrected quite a bit, I mean, I think it is simply a question of waiting for the October to December print, and for that we'll have to wait for about a fortnight more. I mean, as results start to roll in, right? Yeah. I mean, by the 15th or so, things should get into a flow and we'll get more and more numbers, which will start to actually come in. So I think that is the important thing to keep an eye out for. Let's just put those graphics up, please, if you can. It's at the margin, I think some people will try and buy in. There are enough sectors and stocks. I mean, I can make justification for why this should be bought, that should be bought, etc. I mean, I've looked at 10-year P multiples, and there are many stocks which are available close to those multiples, or maybe the 2008 financial crisis low. Right? I mean, at those multiples, or maybe 5-10% higher than that. But the question is, those kind of people who would buy now are a bit of contrarians and maybe a little bit brave, right? I mean, because you don't know, ideally the bulk of the big money would want to wait for the earnings season. So even though I think, as you're seeing in the market now, some sectors might get bought, some stocks might get bought, it isn't enough to move the needle per se at an aggregate market level. So that's the other point. The other point, I think we've all kind of focused very much on consumption, right? I mean, auto consumption, food sector consumption. But look at the industrial pack. Have we heard of any real big order flow over the last, 1.5 odd months, 2 months or so? Absolutely not, right? It's kind of completely dried up. So when you talk to companies, you kind of understand that tenders are there, but orders aren't getting finalized. I mean, tenders, finalization and they're not being put out. And I think it's understandable, because the government has been extremely busy with demonetization and then dealing with the fallout of demonetization. And I just want to pick one point about mid-caps. Mid-caps, the reason they might recover with lag now more than any time else is because unless you see visibility in large caps, it's very difficult to see visibility for smaller sectors. I'm not talking about stocks, I'm talking about the business per se. I mean, unless you see L&T doing well, can you really go into a smaller mid-cap, small cap, right? I mean, operating leverage and those kind of things I understand. But generally speaking, unless an ICICI bank does well, will you really go into some small NBFC, some smaller banking company? I mean, it's unlikely that those will do well. So I think, because this is not a stock issue, this is not a technical issue that where will flow go in first. It's essentially about underlying business starting to pick up and doing slightly better. So in that sense, I think you need to start to see visibility in some of the large caps before mid caps start to participate and do well. But that's, the commentary on markets. Let's get in.